I don't believe in having to own everything personally. In fact, it's important for us to have what we want to use while we're on this earth, but owning it is not important. It's the value you get out of life. And so sharing is really important, whether it's whatever you have, just share it. In my opinion, to make my life a lot happier when I share it, no matter what it is.
Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe the key to scaling and compounding your wealth starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you build and scale your wealth in life so you can give more or all of it away. My name is Brett Schwartz, and every episode we are joined by some of the best world's top entrepreneurs, millionaires and billionaires, and they share their expertise, their wisdom, their knowledge with us and their area of niche focus. So again, we can all grow, give, and make a bigger impact in this world. Hey, I'm excited about our next guest. He's now a friend of mine, and he has an amazing background of over 40 years as an entrepreneur that includes 25 years in the financial services industry. He formerly held a certified financial planner designation, life, accident, health insurance licenses, and FINRA securities licenses. And he also founded a company that was registered investment advisor with assets under management exceeding $100 million. He has started several businesses, including a hedge fund of funds, and he has his due diligence and analytical processes led him to positive annual returns, even in bear markets, and so much more. Please welcome to the show with me, Gary Menzies. Gary, how are we doing today?
I'm doing great, Brett. Thanks for having me on this show, and it's exciting. It's been great meeting you not too long ago, but I feel like we've become friends almost instantly, and
Yep.
been doing some business together. It makes business a lot more fun when you're dealing with great people.
Absolutely. Yeah, I'm
Yeah.
excited to be a part of what you're doing and to even introduce our listeners to it as well. And so we're going to be talking about revenue-based financing, right, which is a unique model for investors and also a great service for small businesses and such. But before we get into all of that, Gary, would you give our listeners just a little bit more about your story and your current focus?
Sure. Yeah. So I've been around a while, but as you read, I started off as an investment advisor, but really as an entrepreneur. I ran my own small practice, and in doing so, I helped a lot of small businesses start up, how to grow, and then how to manage their money and all of that. I sold that business way back in 2010, but the experience was great. I went on to get involved in many other types of businesses: real estate development, restaurants, aviation is a passion of mine. And I was very fortunate to be in the industry for a while. But then about 2 years ago, I was ready for my next adventure, and I was introduced to this world called revenue-based financing, which, quite frankly, I had never heard of. And most people that I introduced this to have not heard of it. It's a kind of a quiet business and industry, but it is an $18 billion and growing industry. And what I love about it is that we help small businesses. You know, small businesses are very underserved when it comes to being able to access capital. And having been that guy that's gone to the banker and been laughed out of the office because I didn't have the right credit score, or I didn't have the right track record, or I didn't have $1 million in the bank, already. I know what that's like. I know what it's like to struggle in a small business. So when I discovered this industry that makes it very easy for businesses to access capital that doesn't require, the traditional banking requirements like tons of collateral, perfect credit score, and, personal guarantees, I was intrigued. But then as an investor, I was even more intrigued because it allowed me as an investor to directly participate in providing that capital to small business. So it's a win-win. I like to say, Brett, and if I had to summarize what we do, we're like a bank on steroids.
Absolutely. And again,
Everything's fast. Yeah.
yeah, absolutely. This is really neat. And so it's called Merchant Marketplace. So break down how what it is, how it works, and let's just keep
Right.
diving in as we go here.
Yeah. So let me make it clear what a merchant cash advance is and what it is not. The best way is always an example, right? So let's take an example of a small business guy, a guy who owns an Italian restaurant, pizza guy. He's been in business a few years. He's doing well. He's doing about $30,000, $40,000 a month in revenue. everything's good. And then one day his pizza oven blows up and he's out of business until he can replace it. He needs $20,000 and he needs it like today or tomorrow. And he happens to be in a little lull. He doesn't have the money on hand. What's he going to do? Well, that's where the merchant cash or revenue-based financing industry comes in. Merchant Marketplace is a funding company, along with many others. It's a competitive landscape. We're not the only ones in the game. In fact, PayPal is one of the biggest players. And in any event, so he comes to us through a broker, a broker that works with merchants. And the number one thing that we look at is what is your revenue? And we want to know what your revenue is because we're going to buy some of that revenue. That's how we're going to provide the capital. So we want access to the merchant's bank accounts, which it's the technology that makes all this possible. So we can log into his bank. We don't need paper statements and sending all that stuff. We just log into his bank account. We look at about 6 months of his revenue, and we see that, yes, in fact, this guy has good, steady revenue, whatever it is, 30,000 a week, 40,000 a week. So we like that. We do some basic underwriting, but it's not credit score related. We don't need we don't need financial statements and P&Ls and tax returns. We don't really care about all that. We care about revenue. So we like the deal as an investor, as an investment company, as a funder. We call ourselves funders, and we say to the merchant, yes, we'll give you $20,000. We can have it to you by 4:00 tonight or tomorrow morning. And in exchange, for the $20,000, we're going to purchase $28,000 worth of your future revenue. And that's calculated on what we call a factor rate, depending on the riskiness of the deal or how likely we are to collect. So we will then enter into a contract where he gets $20,000 today, and we're going to take $28,000 out of his revenue. We're going to do that by making daily withdrawals from his checking account over say a 6-month period. That's the typical term, 6 months. That would come out to around $250 a day, business day, that we pull ACH out of his checking account, which is a pretty high, a high return for an investor, but it's a lot to pay for a merchant. So the first question people have is, well, that's like 40. That's a lot of money. That's 40%. Interest. Well, it's not interest, but it's a 40% premium. And from an investment standpoint, if you did that twice in a year, that's an 80% annualized returns. So merchants have a variety of reasons for using this money, and are willing to pay for it. And the reason that we have to charge rates that range from 40 to even 100% annualizes, we know that some of these merchants will not be able to make the payments. It happens. And we hope that doesn't happen. We don't want it to happen, but it's kind of a fact of life. Similar to a credit card company, they know they're going to have a certain number of defaults. So we build in enough of a return to make sure that the investor side does well. But it's a great way for businesses to get money. Sometimes it's solving an emergency, but many times it's for an opportunity. And the industry is growing. It's been around for about 10 years now, but it's the ability to transfer money on a very fast, daily basis that makes it possible.
Okay, great. And the technology behind all of it makes it possible. It's called Merchant Marketplace, everybody. And it's interesting that PayPal's a competitor, right? But it's not uncommon. It just maybe the traditional investor in real estate or businesses may not know about this until they do. And so that is kind of the thought here. So let's take it from an investor standpoint, right? We understand the need. Businesses have these short-term needs. And they have even short-term opportunities, and they need cash quick, and they're not wanting to go to the traditional banking methods that could be slow and arduous and challenging. And so this comes in and it provides this short-term loan. It could be 3 months, 6 months, 12 months, or longer potentially, right? And then it slowly gets paid daily. It's pulling from their account automatically. Ends up being could be 20, 30, 40, 50% premium, but they needed it, right? And they could always pay it off early if they wanted to. But in the meantime, talk about how the technology works and how you're able to diversify as an investor, Gary.
Right. So obviously, a funding company need the money to put out. Basically, we're just like a bank. We're paying depositors. Banks pay depositors. 3%, 2%, 4%, and they lend it out at 6 to 8 or 9%. Same principle here. So our source of money, we've chosen a very specific source of our capital because we want to help as many people as we can, and that is called syndication. So our supply of money is some of our own money, but the vast majority comes from outside investors. We call them syndicators. One thing I want to say, you mentioned the word loan. I always have to go back and say, well, we're not a lender, we're not a bank, and these are not loans. These are contracts, and we have to be very specific about that. But getting back to the technology, so the merchant marketplace, the founders built the first and only peer-to-peer platform that allows or makes it easy and accessible for syndicators to participate in each one of those contracts. So in the example that I just used and that's a small deal, 20,000, but in fact the deal sizes range from 10,000 up to, our company currently is at $500,000. It's kind of our range, and our average is probably 75,000. Our average deal size, but I'm just using 20 for the sake of explanation. So what happens is this: when we decide to fund that merchant for $20,000, we immediately transfer the money to the merchant. We, the merchant marketplace, decide that we're going to retain a certain portion of that for our investment portfolio. So let's say and typically it's about 25, 30% of the deal. So we're going to keep 5,000 of the 20,000 for our portfolio. Our investors, syndicators, are going to get a notification on their phone, a ding or an email that says there's a new deal on the platform. And this happens all on the same day, by the way. This isn't stretching out over weeks. So the syndicator gets the notification. They can they hit the app, and they can see the terms of the deal. Okay, this is a pizza restaurant located in Chicago, Illinois. They've been in business 10 years. They're doing $40,000 a week. It's a $20,000 deal, and it's a 1.4 factor, and all the terms are right there in front of you. You as an investor can hit a button, or we can do it for you. And Brett, you're so busy that we just do it for you, right?
Mm-hmm. Yep.
But you can do it yourself, or we can do it for you. So let's assume that there's 15,000 of the 20 available. So you put in $2,000. And that sounds like a little bit of money. We're working with people that have hundreds of thousands of dollars invested. Some are 50, some are hundreds, but many are hundreds of thousands. So in this case, again, $2,000, you now own 10% of that contract. In fact, when you hit the $2,000 investment button, it instantly creates a contract with all the terms and conditions that I just described. And it spits it out to you, signed and sealed, and it's in your file. So that means you own 10% of that deal. In 3 or 4 days, we'll start pulling money from that merchant. So we're going to pull $250 a day. Simultaneously, that withdrawal is going to be divided among the syndicators. So you put $2,000 in, you own 10%. So $25 is going to go into your wallet the same day. And so you immediately start getting a return on your investment. It's a very unique investment compared to anything else people might consider. And I would actually categorize this in the alternative investment class. If you're looking at asset allocation, and maybe even consider private equity, but to get immediate return. So starting 3, 4, 5 business days from the time you purchase the contract, it's going to start paying you revenue, and that goes right into a wallet that you can maintain, or it can go right back to your bank account if you wanted to, but we recommend you put it in the wallet and you start getting paid down until the 28,000 is paid back. So that's one deal. That's one deal.
Yeah. So let's break this down with some real numbers, right? So let's say someone had $100,000 and they were to go into the deal. You said they had like a 40, I think 40% markup, right? And let's say it was exactly 1 year from the time they put the money in, right, Gary? What would be the return after the merchant marketplaces and the tech fees and all that stuff in between? what are they
Right.
looking at as a total return at the end of 1 year?
Right. Well, and that's a very hard, it's a hard question to put a percentage on it. But in dollars, in terms of dollars, um, the broker that originated the deal, all
Yep.
these deals are originated from brokers. The broker has to be paid. There's a certain percentage management fee that the merchant
Yeah.
marketplace has to
Just
charge.
net it out. That's fine. Just assume it
Yeah,
all
so
nets out. What would they get on that one?
yeah, 1.4 ends up being like 1.25. So say 25%,
Okay, so about
roughly, depending.
125,000 on a deal that was a 1.4. And what was that 1.4? What did that
But
stand for again?
that's the factor that we charge
That was the
that
factor,
restaurant.
right? So that was about the
But that's
40% factor. So if they
but
borrowed,
that's but that's 6 months. So
yeah,
really the okay. Let me give you what I'll put it to you this way. There's a bunch of syndicators. Their annual return, if they start with $100,000
yeah,
a year in, could be anywhere, and it depends on the number of deals they get into and the types of deals. Are they the
sure.
more aggressive or the more conservative? Can range anywhere from say 20 to 30%,
Okay.
net of everything.
Yeah.
Okay,
Yeah.
but
Yeah.
yeah, just like anything though, it requires a commitment to the process. Remember, let's talk about defaults. I like to hit the questions right up front. Right, there's going to be defaults. We underwrite. We try to do the best we can to pick the best merchants that are going to pay us. But inevitably, something can happen. I mean, God forbid, if you were running your pizza shop in North Carolina, what was that, South Carolina, North Carolina, hurricane hits, you're out of business. I mean, things like that can happen. So
Before
first,
we go into pizza shop stuff here, I mean, there's manufacturing, there's
yeah,
industrial, there's
oh yeah,
automotive.
yes,
I mean,
yes,
just
yes,
talk about the variety here that people can choose from. There's real estate.
sure,
It's not just a small, retail,
right,
or just retail in general, like which can be very volatile. So talk
right.
about, some of the
Oh
other
yeah,
ones.
and I should thank you for bringing that up. I like my simple examples, but
Yeah.
yeah, we fund all kinds of companies, even doctors' offices, dentists,
Yeah.
accounting offices, um, just about any kind of retail business, manufacturing, transportation, construction. We have many real estate management companies. We're not a mortgage broker. We're not offering mortgages, we have many real estate. I call them management companies. Maybe it's a guy with a bunch of rental properties and he wants to do a fix and flip, but he has solid cash flow because he has rental income.
Mhm.
A pure fix and flip kind of guy is going to be more like, no cash flow and then a big bang at the end, right? That's really not who we're going for. But a management company, yes, and they range in size. I know we just did a deal, cash advance with a season. It's a seasonal business, and there's the challenge. But it's a big business. It's camping. And in upstate New York, they do incredible revenue. I mean, tens of millions of dollars. It's real estate. It's camping. When I say camping, like motorhomes and all that sort of thing. And we did I think it's like $300,000 deal with them. So yes, it can be just about
Good. So lots of
anything that
variety
has,
there. So back
yeah,
to the default. Okay. So there can be defaults and
right.
they do happen. So this is part of why, these returns are better than average, but there's also some risk involved. So talk about that.
Yeah, so the way to mitigate the risk is through the law of large numbers. The more deals you have, the less risk it is, and then you average to a mean. And let's say the industry typically reports anywhere from 10 to 15% of these deals will default. And by the way, default doesn't mean the money is lost. It just means that the original terms as agreed upon, are modified, and maybe there's legal expenses to recover, but it's not all lost. But in any event, the way to reduce the risk is to diversify. So if you come to the table with, $100,000 as your example, you wouldn't put it in four different or five different $20,000 deals. You would put it in 40 or 50 different deals as a minimum.
Mhm.
So it would take, and usually as we're a growing company, but the number of deals that we do in any week varies. Some weeks we'll do 10, some 15, sometimes three. And so there's a little bit of a deployment, time frame where um, at this point. Someday we want to take an existing portfolio of already originated and paying cash advances and maybe offer it to an investor as a pre-made package. We're not there yet, but that's kind of in the long-term plans. But in any event, yes. So the safety is in the diversification, and another really big feature of this platform. I mean, there are some funding companies that do take syndicators' money, but it's on a friends and family basis, and there's no platform. It's more like I started my career in that kind of an arrangement where I'd get a call from the funding company, hey, on the phone, hey, we just did a deal for 50,000. How much do you want? Okay, I'll take 5,000, and then you'd have to wire the money, and it was very, very inconvenient and not as transparent. But all that to say, on the platform, if you go to the website, it's kind of a misnomer. It says you can invest as little as $100. Well, technically you can, plus the broker's fee. But the reason that's important is when you get those little payments back every day or every week. By the way, some contracts do pay weekly, some pay daily. That money goes into your wallet, and you can take as little as $100 and buy the next deal. So the platform gives you the ability to compound. And one of the biggest features of the platform, it's all really nice, and it looks good and it works great, and the ability to move money in and out is all wonderful. But the biggest and best feature is the ability to take small amounts of money and keep redeploying it in new deals. So your money's is compounding and building more and more and more diversification.
We're speaking with Gary Menzies here, and he's out of Florida Merchant Marketplace. I actually met Gary at the family office event, two of them, one in New York, another one in Florida. And I got to say, I've been impressed. I've been really impressed, and I'm an investor. I'm a part of it, and it's been just a few months, but so far so good. And it's been great working with Gary, and I like it because it's kind of like an Uber app or an Airbnb app where you can log in. Very seamless, very clear, right? And then you're going to see a picture of the investment opportunity or something there, and then it's going to have the stats to it as you click into it. It's going to go through it all, the details, and it's all broken down, and then you can quickly determine how much you want to put into that opportunity. So yes, keep going, Gary.
So yeah, and that's the other benefit is the app. And both the phone version and the online version, every transaction is recorded in real time. So when you talk about transparency, you couldn't be more transparent. Every little deal, even down to the day-to-day administration of these advances. There's a section on each deal for notes. So let's say that there's a troubled deal, one that's having a little difficulty, you'll see notes in there of the administration at Merchant Cash Advance. We called the merchant, and he says he'll be back on next week, or we had to push this into legal, or it's come out of legal and is back into collections. So all the notes, every little detail is there. It's very robust, and you can export all the reports, even for taxes. There's and that's another question.
Hold on. I also have a couple questions here. I'm thinking about the listeners might be thinking about. Okay, so average time it takes to deploy. So we talk about 100,000, right? I think that's important to understand. What if someone had $1 million? The next question would be, what average time it could take to potentially get the money back? Like, how liquid might this be? Right. I know these terms could be a 6 month, could be a year, could be a year and a half. So kind of getting a feel for that. If someone comes in and is going, that's important to understand as well, right? So talk about a little about that, Gary.
Right. So we're always balancing the amount of money we have available or coming in versus the deal flow, and that's kind of the balance that we have to always look at. So certainly we have syndicators with $1 million or more dollars, but then obviously we'd have a conversation. We'd say, okay, we have $1 million committed, then we can turn up our deal flow. So we like to get it deployed as much as possible within a month. I mean, that's the goal. It could be a little longer, could be a little shorter, depending on the deal flow. But we need to have that conversation with the investor to see, okay, what are you committing? How soon? And so on and so forth. So
who's making the interest for that 30 days? So someone puts $1 million in tomorrow and is waiting around for a month. who's
Right.
making that interest while it
Well,
sits?
it isn't okay. It's in a wallet, which the wallet doesn't bear interest itself, but
Hmm.
money is transferred with the push of a button. So you can on the app, right on your phone, you can put add money to your wallet. You, the first thing we do is we link your bank account to the app
Hmm.
using the company called Plaid, that
Yep.
API that's,
Yep.
highly secure. So we
Yeah.
have no information. We don't know your bank numbers. We don't know how to access any of that. Plaid does all that for us.
Hmm.
So add money, you hit the button and it goes into your wallet. And as long any money's in your wallet, it has to be there at least 5 days, and then you can hit the withdraw
Mm.
button and pull the money out. The reason we have to leave it in there 5 days is the ACH world is its own very high tech, complicated world. And I'm not the expert. Our founder, Adam Schwartz, is the expert on.
Good last name, by the way.
Yeah, exactly. Um, so when I ask him what happened or whatever, sometimes these ACHs can be reversed on the merchant. Like the merchant can reverse
Yeah, so
it
you
or
gotta wait
something.
5 days. Yeah, so it's 5 days
Yeah,
the minimum withdrawal there, but the money could go in today, and you could if
right,
the deal could be open, you could deploy today. You don't have to
exactly.
wait five
Right.
days to invest,
And
right?
for our larger investors, say over 100,000, we're having conversations. So
Okay, all right. So
we've
there's
got
ways to
three
do that.
deals
Got it.
coming up
And
next week.
yeah,
Yeah,
there's ways to do that, and there's ways to move it quickly, and so you can be earning interest where you're at, and then just be ready to go. And
right,
obviously, you start with smaller amounts, and then you get in the rhythm here.
right,
So okay, good. So 20-30% is pretty compelling, Gary, right?
right.
And the default, you need to be aware of the risk and the default, and you have to work the system here. But everything I'm liking what I'm hearing. What other questions haven't I asked that you want to ask and answer?
Well, a lot of people ask about how do I pay taxes on this stuff, and
Yeah.
it's something that we need to address. So this is not a fund in the traditional sense. This is not a hedge fund or a private placement.
Hmm.
This is called a direct participation opportunity. We are literally partners with you on every deal. And
Hmm.
and we have paper to prove it. It's called
Yeah.
a participation agreement. So the way that we do the accounting, and when I got introduced to this industry, like I said, 2 years ago, I did a lot of due diligence for myself because it was new to me. I'm kind of a due diligence freak, I got to know everything. And of course, I started talking to accountants. How do you treat this for taxes? Again, I'll use my little example, 20,000, and I get 28,000 back. Is that 8,000? How is that taxed? And the answers come back in a variety of ways. Is it capital gain? Is it long term or short term income,
Yep.
short term
Yep.
gain,
Yep.
income, and so on? The point of the matter is when we do on the app, it does a standard account of accrual accounting. So every time a payment comes back to you, there's a calculation in the app that says so
Yep.
much of this payment principal and so much is interest. We give you that information. It's up to you to decide what you want to do with it. We
Okay.
don't have to, we're not required to issue 1099s or K1s or anything like that. So each individual investor can decide how they want to handle it.
Okay.
And some choose one way, some choose another way,
Yeah.
because even the accountants can't agree on the right
Okay.
way.
Yeah.
So,
So you got to be aware of that. You got to be aware, and you got to report it properly. We work with your CPA to figure that out.
right.
So good. What other
But it's
questions?
flexibility. I
Yeah.
would say this is a more like a business than a traditional investment. You are
Right.
partnering in every deal. Just wanted to throw that out there.
Good. Yeah. That makes sense.
And in fact, if you wanted to call it that and create, or put it into an entity or a business you already have, all the traditional, tax write-offs that you can apply to a business, travel expenses. Oh, you want to go shop around, you want to go visit the offices on Long Island, you want to go
Yep.
visit me, you want to,
Yep.
so you could set it up that way. And I like the flexibility myself to be able
Yeah.
to do that versus
So if
just
I had
getting
an
hit.
LLC or a business, I could do it through my business account on that, and then that's
Right,
I can get write-offs as I'm maybe even
right,
researching
right.
and looking at the businesses that we're loaning to. Right? Are you able to see that to that
Well,
detail?
we don't put that out because we have probably
Okay.
150 syndicators on the platform, and we don't want to name them. But in certain cases, okay, for instance, when we do, let's take the $1 million investor where we're trying to match deals with the amount of money available. that
Yeah.
person is entitled to know the exact company, on a separate.
Okay.
We don't put it
Yeah,
out to the
on a
public.
custom basis you
Yeah,
can, but yeah, you're not opening up to the
yeah,
whole world to know what these
right,
businesses are. The businesses aren't going to
exactly,
want to, advertise that either. They want
right,
confidentiality. That makes sense, Gary. What other
yeah.
questions haven't asked yet I should ask?
You've done good. I mean, I'm trying to think what else you should know. I really need to emphasize the fact, and some of the mistakes people have made as syndicators.
Okay.
You
Oh, yeah.
need to view it as a long-term investment. I
Okay.
mean, the results come back immediately. There's like a little dopamine hit when you start seeing checks hit your bank account every day,
Yeah.
right? This
Yeah.
is cool. I always say my favorite time of the day is 4:30 when my phone dings, and
Okay.
I see how much money I got for the day. But you really need to keep reinvesting for the long term, at least a year and a half.
Okay.
18 months is kind of the minimum. And
Okay.
if you do that, because you're going to see, think about it. If you in your first 4 deals and one goes defaults, all of a sudden you have a 25% default rate. Well, that's not representative of
Right.
way that so the longer you keep reinvesting, the more deals you have, the
The more the
better off it
compounding
is.
effect with all the
Yeah.
cash flow coming in. Yep.
Right.
So that's
So
good to
be
know. So a good
committed.
rule of thumb is 18 months or more, then you're really going to see it fly. Okay. What else, Gary?
Well, that's it. I mean, just you
Yeah.
got to get, it should be a part of your, everybody's portfolio.
Cool.
It's a
How
good
do people
old
get started? How do people get started?
call me. Call me
How,
is the easiest way. Yep. Well, put my information when you put this out there.
well, you can just share right now. What number to call you on?
484-894-5066, or you can email me at Gary@merchantmarketplace.com.
Yep. Merchantmarketplace.com. 484-894-5066, right?
Right. That's direct.
Yep.
And I
Yep.
mean, it's possible to try to do your own thing by going to the website and doing, but I can expedite that whole process
Yeah,
if
you're
you
not going to
call
want to
me
do that. You're
directly.
going to want to call Gary. Call Gary, and he will get you the information you need to get going. And he'll also, like he said today, tell you all ins and outs. He's certified, financial planner before this world, right? And so he's aware of the proper way to communicate and set expectations. I think this is really good. Gary, you
IRAs,
ready?
by the way, IRAs, 401ks, you can set
Oh,
up a
good.
self-directed account. And that's something that people may or may not know about, but you can invest your
Yeah,
IRA money, qualified money, I should say, in
that's
just about
awesome.
anything with a self-directed. So
Perfect.
we have that arrangement set up if you want to go that way.
Real good. And by the deferred sales trust, you can go into any asset of any kind. So this can also be for my clients. If we want to diversify and get some excess returns here, I think you're going to love this opportunity. Okay, great. Gary, you ready for the lightning round?
Should go fire away.
All right. Knowing what you know now, if you could go back to your 30-year-old self, what's the one gold nugget? Make sure to tell yourself to do.
Oh man, I didn't know we had a lightning round challenge here. Say that again.
I said the golden nugget. What's the one golden nugget? If you go back to when you were 30 and you could
Yeah.
tell yourself, one, piece of advice or thought, or, what would it be to make sure to tell yourself to do?
Anything is possible. I mean, be a, and that's a spiritual thing. I mean, delight yourself in the Lord, and He'll give you the desires of your heart.
It's awesome.
And that's true, and it can be, and it's bigger, better, and than you ever expected. So,
Amen.
got to be a believer.
Amen. Amen. Question number 2, number 1 book you've recommended or given the most in the past year?
Think and Grow Rich.
Awesome. Love that book. Question number 3, what are you most curious about right now, Gary?
Oh, I'm curious about a lot of things. There's a lot of ways for people to make money. I just got off the phone with a gentleman who's a networker. He's a professional networker, and he did. He said, "I'm about to make $1 million." I said, "Well, how did you do that?" He said, "Apparently, Visa and MasterCard. There was a big lawsuit to anybody that processed credit cards. I don't know if you follow the story, but it's like a multi-billion-dollar payoff to merchants that use those credit cards from a period of, I don't know, 2007 to 2015, that they were basically ripping off merchants. So I get that mail, you get like a penny on the dollar. But anyway, this class action lawsuit, somehow he was able to work a deal where he approached all these merchants that have processed credit cards but have no time to fill out a stack of forms to claim whatever you might get, $1,000, $100. And he went to all these people and he said, I'll do all the paperwork for you and try to claim your class action lawsuit. And he said he's going to be getting paid $1 million this year because it finally was approved. And he did it for 1,100 different businesses. And I was like curious about that. Like, that's crazy, right? That's like just helping somebody do something that they don't want to do themselves. I was curious about that. And I mean, I just heard about it a couple hours ago. So it's just amazing to me when you really think about it. You open your mind and you're open to anything. I think that's one of the most important things I've ever done. I've always listened to the story. Somebody wants to tell me a story about a business or an opportunity. I never say no. No, tell me the story. And that's a game changer for me because, some of them might not apply to you or you're not interested, but you never know till you hear the story.
Good. Love it. Next question. Number one leadership quote or theme that you strive to live by.
Boy, leadership. Well, I mean, I've tried as a business owner or whatever, I've tried to, I don't know if it's a quote, but it's a principle. Don't ask anybody to do anything you wouldn't do yourself. Whether it's, cleaning the bathroom or, closing a big deal. I mean, you need to, leadership is being able to do whatever you ask anybody else to do, being able and willing to. And that's, you lead by demonstration.
Love it. Gary, it's been more than a pleasure having you on the show. We'll finish up with this last question, right? Which is the idea of stewardship over ownership, right? How do you best practice that? And what does that mean to you?
Well, stewardship over ownership. I don't believe in having to own everything personally. In fact, it's important for us to have what we want to use while we're on this earth, but owning it is not important. It's the value you get out of life. And and that's part of stewardship, managing it for others or for the benefit of others, whether it's money or resources, and sharing what you have with somebody else is, to me, more valuable than owning it myself. I mean, I can give you a million examples of that. There was a day I used to fly my own airplanes. I loved aviation, but my worst days are when I had this beautiful airplane sitting there, nobody to go along with me. So sharing is really important, whether it's, whatever you have, just share it. And it makes, in my opinion, it makes my life a lot happier when I share it, no matter what it is.
Gary, what a great thought to lead on. I want to thank you for sharing your passion for helping people create and preserve wealth and be open-minded and find ways to make excess returns, and also becoming a friend now. And I introduced me to Merchant Marketplace. I'm proud to be a part of it, and I'm excited for where it's going to go here, and the listeners who are listening, and the impact it's going to be able to help to have for them and for their kind of returns and becoming a business partner within the Merchant Marketplace world. I want to encourage everyone to take some action today. Connect with Mr. Gary Menzies. And you can just call him on his phone number, 484-894-5066, 484-894-5066. And with that, I also want to thank all of our listeners for listening to another episode of the Build to Billions podcast. Thank you so much for being a part of our journey as we help ourselves, as we bring on people like Gary and help you guys and gals, scale from millions to billions so you can give more, all of it away. And we all do this by practicing, we believe, a stewardship over ownership mindset, as well as billionaire biblical principles. And the question for you today is, what are you going to do with today's episode? Maybe you can share it. You can take some action on it. Whatever it might be, we encourage you to take that action. We encourage that today. Thank you so much for listening or watching. Also, check us out on Capital Gains Tax Solutions podcast and YouTube channel as well, where we're also streaming this. Thank you so much, and we'll talk to everyone real soon. Bye now.